Hi everyone, greetings again from me to you. Today I said I was going to talk to you especially on the break of structure and the change of character. Now, there are different languages that can be used in trading, and no particular one can be described as wrong, especially when it donates or connotes whatever it is being described as. So what you first must pay close attention to is what the mentor or the illustrator or the describer is describing before you can understand what is being discussed. Okay, so we have some people regard to what we call change of character or a complete market structure shift. Okay, some call it MMSS, and then we have the break of structure. All of these is what we normally use to determine the reversal that occurs in trading, and then we're able to tell what the direction of bias is that particular market movement. So we're going straight into market structure, and I said I was going to show you some of the internal break of structures that some people usually use instead of the external break of structures. And in some description or illustration, they could be described as fake break of structure, and which I will not necessarily call them fake break of structure because you can use them to catch internal trends. Quickly, let's go to the dashboard, and it is being drawn. It is easily understood, but when you begin to try to locate it in the charts, there's usually some confusions that will come in, especially because you're going to be filled many candles. But let's quickly draw it before we go into the candles. So first of all, when we're talking of break of structure, this is what it means. It means that the market has constantly maintained a bearish, take for instance for a bearish market, a bearish trend, of which that bearish trend has gone to a certain extent, and then suddenly you observe what we call something like a market structure shift or a sweep of liquidity to the upside. Sometimes it may even go like this, okay, and then go and swipe this, and then sometimes it fails to go down to the previous low, and then it just forms a new high, something like this. Okay, so the confusion and the discrepancies here is when are we to ascertain if there is already a new trend coming. Okay, because if you look at this very well, you understand that this was first a downtrend, okay, and all of a sudden something began to happen. There is a sudden kind of change that begins to occur. Now once you're able to spot reversals in trading, it's going to really help you to succeed. It's going to really help you to make accurate decisions and make quite a lot of money, because most times the major moves starts from the reversals. Now there can be another one like this, okay, so market is going up, okay, so this is more like a bullish move, okay, a market comes, retraces, and then takes out the upside, comes, retraces, takes out the upside, and next time it just comes, instead of taking out the upside, it just comes like this, and then goes like this, and then goes like this, and then goes like this. Okay, most times people are quick to just go into the downtrend move, but that is exactly why I'm making this video. In this case, you do not go in immediately. Now let me show you why. If you watch closely, one of the best ways you can be able to know what these things are, first of all, let me write out their names so you can be able to differentiate them. So the first one we have is BOS. Let's just call it full break of structure, okay, and that's also known as BOS, because I'm sure some of you must have been seeing BOS and you're wondering what that is now. And then the second one is change of character. These two things can be a big changer for you. Don't joke with these two things, because once you can be able to understand them, that's why I want you to pay close attention to this video. Once you're able to understand these two things, you're just going to keep winning and keep winning in the market, because it means you have understood at least market structure to a good or reasonable extent. Now some people call this market structure shifts, okay, because that's what tells them that okay, right now this market is going to take in a new direction, so they call it market structure shift, also known as MSS. Okay, meanwhile some other people call sorry, so let me just shift it. Okay, so some other people call this change of character. That's the first one here, and the second one break of structure. Now do not lay emphasis on the terminologies, just like what I told you at the introduction of this video. Where you should focus your mind on is what they were referring to when they were talking about what they were saying. So the major thing there is, first of all, you must understand that when a structure is formed in trading, especially when it's a trend, like we always tell you, follow the trend. Don't trade against the trend, because the trend is your friend. So you find that there is a structure, market structure, which is a certain trend, and then all of a sudden, anytime price takes out a very key high or a very key low, then there is a need to pay attention to what market is about to do, because most likely what it means is the market is about to form new structures. So we use break of structure in my strategy to describe that, okay, after a break of structure and a change of character, so change of character is like two break of structures going in the same direction. Now there can be a break of structure that is in an opposite direction. That's a range. Okay, up break of structure, down break of structure gives you a range. But when you have a break of structure and another break of structure in the direction, we can call that second break of structure change of character. Regard it as a market structure shift, because in our terminology, a break of structure is formed when, okay, take for instance, this is the high, lower high. Let's use this. Okay, let's use this. Let's see, because I want accurate straight lines. So let's see. Okay, so let's say this is okay. No, let's not use that. Let's use this. Okay, so let's say this is a lower high. Okay, now for there to be a structure that is confirming this particular trend, let me shift this to one side now. Okay, there must be another what? There must be another what? Lower high. There must be another lower low that is taken out, creating a new lower high. So the previous lower low was this. Well, let me show you. This was the previous lower low. Okay, let me shift the line so it's not too long, and shift this one so it's not too long. Okay, so this was the previous lower low, and this was the previous lower high. And then the moment price broke out, because this is a structure and this is a structure, the moment price took out this structure, what it is called is break of structure. So you can, some of you see a lot of people just come and they label BOS, and you're wondering what that is. That's exactly what brings about that name. So you can actually name it. How do you do that? Okay, you just label it. Okay, so you just put a text and you can just call it whatever you want to call it, but that's how people come about it, in case you've been wondering how. So that's it. That's just by the way, I just want to teach you that. So that confirms the break of structure. So as long as that which played out there continues, which of course that's what is expected in a trend, you keep having what? Break of structures. Okay, so and that tells you that the market is going to a particular direction. Now as a good trader, if you're not able to know where that structure is going to stop, that's where most traders usually have issues, and that's common with newbies. Okay, so you must be able to know where the structure is changing, and that's why we use market structure shift when structure is changing, because it just tells you that there is a shift. I love that term. So when I say market structure shift or a complete market structure shift, that's what I'm talking about. Some might call it market structure shift for a break of structure, and say complete market structure shift for another break of structure that confirms a new trend. So when they say complete market structure shift, they're referring to CMSS. Excuse me. But for market structure shift, they're referring to MSS. So in this case, when market took out this structure, sorry, sorry, excuse me, just as that trend is maintained until there is a new change. This was the least, or let's say the most let's say least, the most recent, the most recent lower high, okay, that gave the what, the most recent break of structure. Until price takes out that lower high, you have not gotten the outer break of structure for that particular trend, because this trend is confirmed by this break of structure. Now, how do you know this break of structures? Because there can be several structures in a break of structures. Such structures are referred to as internal break of structure. I'll show you what I mean. Sometimes inside a structure like this, you can find something like this, and some people will call it confusion. That's why people, those who don't know much about trading, they say, oh, this price is just, you know, playing around. But that is actually referred to as internal break of structure. There are some people who don't know it, so they can use it as their normal break of structure or their supposed break of structure, and it fails them. And such people will come up with terminologies like failed break of structure or fake break of structure. But I don't believe there's any such thing as fake break of structure, except for a reason where price comes like this and then comes and fails. So the deception there is that price actually did not take out this particular structure, okay. But if you look at a candle, I'll show you examples. You find a wick pointing upward, but wicks are price rejection. So anytime you find that a wick is closing the body of a candle, then that can be a fake break of structure, because that was a wick, so it shows huge rejection. So it is not a break of structure. So in fact, some people call it complete full liquidity grab or complete sweep of liquidity, okay, because you will see it is a wick, okay. If a wick, now this is what we mean by wick, in case you don't understand that. This line on top of this candle, so those tiny lines that form on top of the body of the candle is what we refer to as a wick. So anytime you see such, or peradventure it's maybe in the other way, there is a wick, okay, on top of this place, and this one is closing with a body. As long as price is still on the body, if it's on a wick, then you don't consider that aspect, okay. You consider only on the body. So the wick can actually give you something that looks like a break of structure, but it is a fake break of structure. So that's the only time you find a fake break of structure. So going back to the internal break of structure to help you understand perfectly how that works, you will notice something like this, like what I just showed you here, zigzag move or price trying to come up, okay. That's usually what happens before every reversal. There's usually a range. Once you know these things, then you're going to be a good trader, and then you're going to choose, are you a swing trader or are you a trend trader? Because if you are a swing trader, a trend trader, and you don't know what swinging is and you don't know what trending is, then you're going to have a problem. Usually being a trend trader is very easy, because what moves the trend is liquidity, and is the big players, and they have great influence on the market. So if you catch a trend and you follow the trend through, you're going to find that price will keep working in your favor, and that's why I said the trend is your friend. But when you're trading swinging, you must be very careful, because when market is swinging, there are times when you may not be sure, except you know the swinging rules. Now I'm not talking about swinging rules in this particular video, so I'm not going to go deep into that, but I want you to know that when you're using the swinging pattern, then you must understand the rules so that you know exactly where to go in. The rules of the trend is the break of structure and change of character, and that's what I'm looking at. Maybe I'm going to make another video for you on swinging, but let's just proceed and round up with this. So you notice that price did this and did this and did this. So if you look very well, you see that there was actually a break of structure here, okay, and a change of character here. But that particular break of structure and change of character is an internal, because if you look very well, this is already an external. So anytime price hasn't taken out the previous higher high or lower low, you know, if it's for a downtrend, it's a lower high, or like this. Okay, if it's for an uptrend, like this, let me just put a line there. If it's for an uptrend, like this could be the lower high. Sorry, it will be lower low. Yeah, sorry, higher low. Okay, lower high, higher low. Now why is it called higher low? Because price is going higher and it gives a low, so it's called higher low. But this one, price is going lower and then price gives a high, so that's why it's called lower high. So take note of those two differences. You may need to study that later to perfect that understanding. So if you look at this place, you see that price gave this, gave this, gave this, gave this before it took out that particular one. So until price takes out this particular one, which is the external lower high or higher low, yeah, this is higher low, which is the external break of structure, price is not changing direction, price is not reversing, it's still going on the trend. Until you see that, that's when you can say there is a complete market structure shift, or you can say that price is about to change direction. Now let me now show you the difference between the complete market structure shift and the market structure shift. Take out this low, peradventure, it is a break of structure opposite the previous structure. Okay, now in that case, that can be an external break of structure. Meanwhile, there are other break of structures that were formed here, but those are internal break of structure. Until you are able to differentiate these two, like this, okay, and this, until you're able to differentiate these two, you would use them wrongly. You find yourself using them wrongly. So you find that the price took out this break of structure and took out this break of structure. But that cannot confirm the trend. Even this one cannot still confirm the trend, because the fact that there is an external break of structure shows that price has to, excuse me, let me get the tool back. Where are you again? Shows that price has to come back, okay, so at least the perfect retracement point before it attempts to do again. If it eventually does again, that's what is called a change of character, a complete market structure shift. Okay, so you can just watch out for something like this, and then a new trend probably may continue downward. I hope that is very clear for you to understand. So let me just shift the screen, okay, perfectly, so you can see what I'm talking about. So this is it. Okay, so that's the best I can do on this screen. So this is it. So price comes, takes out this structure, but there was a previous structure. So when it takes out this structure on the downside, you can call it market structure shift. And then when it gives another one, the times, in case you're wondering, the times when it may do this, instead of taking out this, it comes, it does like this, yeah, and then fails to take out and then continues to go up. In that case, that means price had not fully shifted structure. So that's why when it shifts, we can call it complete market structure shift. Then when it doesn't shift, you cannot call it a complete market structure shift. Take those terminologies. So the same thing I explained to you on the downtrend move is exactly what happens on the uptrend move. So this is an internal break of structure. Sorry. So this is an internal break of structure here. Sorry. Here, and then the second one sorry, and the second one here, of which it took it, as it takes out this and takes out this, you cannot really call that the external breakup structure. So when you are working, in case you want to trade that, it's possible to actually trade that. Now how do you trade that? You take note of the previous low, something like this. Sorry, pressing the wrong key. You take note of the previous low, which was this. Okay, sorry, let's move this again. And then you take note of the previous high, which is this. Okay, it's already there. So whatever price does here, take for instance, you find a breakup structure, you can actually read it the same way you read that, but that will become an internal trend that plays around this structure. So you must be able to know the top part of the structure, and let's say you want to go bullish on this path before confirming the complete market structure. You can actually do that, but your take profit should be on this liquidity side. Okay, and for any reason you want to trade, should be between this point to this point. So all of these are what tells you what the internal breakup structure is and the external breakup structure is. And if you want to look at it in the candles, it is a very simple thing. Okay, you look at the candle very well, you will notice that let me quickly do this. So you notice that this was the high, this was the lower high, sorry. Okay, so this was the lower high, and then this was the lower low. I hope you see that clearly. Lower high, lower low. Now when you go up to the 4-hour time frame, you see that that is correct. Let me just show you quickly. Can you see it's correct? Very correct, easily seen, because that's a higher time frame. So when you go down to 15 minutes time frame, you might not see it clearly like that, and that's because when you go down to lower time frames, several structures have been formed inside the higher time frame structures. That's what the higher time frames are. Several structures in the lower time frame. In fact, if you go down to 5 minutes time frame, you find that even more structures will be seen in that particular structure. Let me just show you quickly. You even see a trend reversal inside. So that trend reversal is an internal trend reversal. If you look that, you will see that we spotted this, right, and we spotted this. So you see that price came here, did like this, came like this, created a trend, created a downtrend, went up, came down, came. Do you understand? All of those things are actually trends, but they are internal structures. So once you're able to understand internal breakup structure, you can read those structures and you can trade them by their timing, and take note of the higher liquidity side and the lower liquidity side as your region or your zone of trading. So let's go back to the 15 minutes so I show you quickly the internal breakup structures and the external breakup structures. So quickly here, you're going to find this. So you're seeing this, and let's label it quickly. So you have the BOS. Okay, so we have a BOS here, right? And then we have a BOS here, and then we have and then we have a BOS here. Okay, I hope that's very clear. And then we have, I wonder why this thing keeps coming here again. It's too close to this particular one. Let me take it out. Okay, so let's do this one. Oh, it still went back there. Okay, let's do this one. So and then we have another BOS here. So if you look closely, you will see that these are internal breakup structures. You see that? Now In this case, you can actually trade them, and this is what you can do here. Because if you are on the 50 minutes time frame, that's enough, because that can give you between this point to this point about 53 pips. Is enough for a day trader. So what you do now is you haven't come here, you will study the structure same way you study the outer breakout structure. You study the structures, you study to see that the breakout structure on the upside, which is this, okay, has formed another breakout structure which can be regarded as a change of character, okay, or an MSS or a CMSS, okay. So change of character, let's just use breakout structure change of character. I'm sure I've been able to explain the differences. Once you see that, just know that a new trend has been created, and once that new trend is created, what do? You take the previous low, which is this, okay, the new high, the previous low, the new high, the previous low, the new high, and you pick price on the POI. So let's say you take it from here and you take it like this. So you have to pick price from the POI. Now from this 15 minutes time frame is not showing clearly, so in that case you can go down to the 5 minutes time frame to confirm, and that's just to help you see when price comes into your POI and know when you're supposed to go in. So anytime you don't find it on 15 minutes time frame, go down to a lower time frame to see it. So if you look, you will see it clearly that price took out this, okay, and then came here. Do that, your entry will just be like this, and your take profit will be on the next high. And that's the mistake a lot of people make. So when they want to give the take profit, they begin to target another outer breakout structure which may not work. So it's this particular one that should work. Now it doesn't matter what price did continuously, be focused on what you want to catch, okay, and that will give you a perfect entry, okay. So like I said, this is the outer breakout structure, these are the internal breakout structures, and so as you have read this outer breakout structure, you can also, but in a higher time frame, read them as, so since price has taken out this structure, if you draw your fib tool like this from this low to this high, okay, it's not able to go that much, okay, let's use something else, let's use something like this. If you draw it like this, you see that price, let's say this is the high, and let's say this is the low, and let's say this is the POI, okay, you see that price eventually retraced back into the POI, which is just around here, and you are catching that entry move, and you're targeting the next possible high if you look at it on a higher time frame. So let's go straight to 4-hour time frame, and you see that clearly, the next possible high, of which if you look clearly you can see what I'm saying. So the next possible high, so this is actually the next possible high, okay, you must see it on this other side. So you must be anticipating that price must at least swipe up to that liquidity. So if you're trading, make sure price is coming from your liquidity prediction to the next possible liquidity grab, and with that you can catch this massive move. And once you've been able to understand such structures, you can just set up your entry and just wait for price to play out. I hope this helps you win. Alright, I hope you were able to learn and understand what I was able to explain to you in this video, and all the various illustrations that I've used in my basic explanation. And I hope this helps you to succeed in the trading market. I hope this helps you to understand market structure and be able to navigate the market at any time and win. I'm rooting for you to win, and I want you to win and make a lot of money in this 2025. Don't forget to subscribe to our YouTube channel. Make sure you subscribe so that you can be able to get updates. In fact, turn on the notification buttons, for that will help you to be able to know when we post new videos that will be helpful and beneficial to you in your trading career. See you next time in our next video.